Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. Chris and Jason here. We are going to be discussing the law of attraction, also known as the law of belief, and how it relates to being a private lender, business owner, entrepreneur. Now, I want to preface this by saying we haven't had this conversation yet. This is a conversation that I brought up because recently us and our business partners, we have mentioned the law of attraction and how it relates to our business. And in essence, what it is your subconscious mind. And this book here was recommended by our business partner, Ian Walsh. It's called The Power of Your Subconscious Mind. And I started reading it during the holidays when I had a little downtime. And so I've been thinking about it and I wanted to bring it up. So we decided to do it on the podcast. And I'll tell you some of my thought process behind it. But just a quick definition of the law of attraction. Maybe you've read The Secret or seen the movie or something like that. In essence, it's what your subconscious mind is thinking about, not your active mind, not the front of your brain, what you're actively thinking about, but what's going on behind the scenes in your brain, and what does that bring or produce in the world of business and life and everything else. Would you say that's a decent, quick definition?
Yeah, I mean, some of the stuff that we've chatted with in the past that we've helped train some of our business partners on is, if you've heard some of our stuff, like all of our, we have one loan product. Everything's the same. We're 1299, 3 points, 1 year loan, minimal 20% down. Like it's our elevator speech. We dream about it. We think about it all the time. It's like the easiest thing ever. Like there's no negotiation. This is how we do. We've had borrowers that have done 100 loans with us. That's what we lend. It works or it doesn't work. So it makes it, and that's just one less thing that we have to think. One less thing that we have to think about on a regular basis. And why I bring that up is one of our business partners like, hey, I got this really good opportunity, and I think they'll go with us if we do 12 and 2. And we're like, no, that's not that. We can't do that. We're 12, 9, 9, and 3. And he's like, well, why not? Well, because if you give them 12 and 2, you're going to have that in the back of your mind. And the next time a similar situation is going to happen, you're going to say, okay, well, maybe I can do 12 and 2. And then next thing you know, we're a 12 and 2 lender, not a 13 and 3 lender.
Right. And, change the whole fundamentals of your business by making those and like you end up negotiating with yourself if you give yourself the option. So here's what I was thinking about that I wanted to bring up. When I was starting to read this book, I'm a few chapters in. And obviously the goal of all of this is to get your subconscious mind to start thinking bigger, attracting bigger and better things. And if your subconscious mind believes that, then your active brain and your actions will go and do it and get them. Now, here's the tricky part. I think that being a private lender, being an underwriter, can be a straight conflict with that goal that I just said. You know what I mean? Does that make sense? Having the brain of an underwriter is kind of the opposite of having your subconscious mind thinking about these big, amazing things you want to attract. Because here's what I was thinking about my own subconscious brain. It's a weird thing to say. I was thinking about my subconscious brain. But having the brain of an underwriter, someone who manages risk for a living day in and day out, creates a lot of fear in your thinking, right? Like we're always, don't get too big, don't grow too much, don't lose money, don't screw it up, all that stuff, right? Like that is too, I don't know if it's too much. Maybe this is the way to be, but maybe not. I think that occupies too much of my subconscious mind, operating from fear and don't screw it up thinking.
Yeah. I agree.
Because on one hand, I want to be like some of the business people that we know and influence we follow, and like we worked with like Russell Brunson and other people that you've heard us mention before on the podcast, and they just think and operate. It's all go. It's all step on the gas, no fear, chase after the biggest things that you can even imagine. And it's hard for us in our business model and the stuff that we're responsible for to have that like foot on the gas at all times in terms of our thinking. And I think that became interesting to me to think about over the past like week or so.
Yeah, I mean, depending on what side of the bed we wake up on, one day we might be like, yo, we should blow this up and grow this bigger. The other side is like, oh, well, we're already big enough, and we need to cut down, and we need to be more conservative and more conservative and more conservative. So like you said, there's a driving force on both sides of it, and you kind of have to find that happy medium. And I think most folks are probably, I don't know. I mean, I think it's an interesting thing, and I don't want to state that like this is the only business that is like this. Like I like to say that and tell myself that. That's like, well, it's just a unique business, right? Like if we were in the mortgage company or we were selling real estate, the sky's the limit, right? Because after you sell it, it's over, right? Like you don't have an economic interest in it after the fact, right? You can do as many and many and many and many, and it's scalable and it's sellable and things like that. And in our business, and I'm not saying I'm right. I tell myself the limited belief of like, if we do more, we're going to have more risk. And that is true, right? You do more stuff, you have more risk. And, we've also, had discussions with one of our partners in the past who we were trying to cut back his portfolio on some types of lower loan amount deals that he was doing that were very profitable, but also they're a real pain in the ass. And some of them that defaulted, we're just skirting out on. And it was a conversation of like, listen, like, we don't want to do these deals anymore. They're heavy lifting. We're not making a ton of money on them. We're scraping by. And he's like, yeah, but we've done these forever. And yeah, we don't make a lot of money on a per transaction, but we've done them in bulk. We made a lot of money. And some of them, when they default, they're a pain in the neck, but we make a lot of money on that. Like if we cut that out, that doesn't make sense. And there's an argument on both sides of that.
Yeah,
Like,
but I think that, same with the pricing conversation. Like if you put positive boundaries around what you are and aren't allowed to do within your own lending company, even though you control your own money, I think that can move you in the right direction. Like for example, if you're like, okay, I'm not doing any loans under 100K and I want to do average loan amount of 300K, for example, if that's what you tell yourself and that's what you get up and go look for every day, that's what you're going to find. People tend to find what it is they're thinking about, and they tend to find what it is they go look for every day, right? And so that's another like part of the coaching with our business partners, which we want to emphasize, is that like, yeah, let's get 300K loans in the suburbs with solid borrowers.
Yep.
We don't need a ton of them. Our business model is that we don't need an absolute ton of them like an institutional lender. We need a few. We need a bunch, whatever you want to call it. And there's just a lot of different ways that you can apply some of this thinking. And I'm definitely stoked to keep reading this book, which is supposed to be one of the classics. Again, it's called The Power of Your Subconscious Mind by Joseph Murphy. It's supposed to be one of the classics on this subject, and I hadn't come across it until Ian Walsh mentioned it to me. And I'm going to keep working on this topic, because I do want to, as an entrepreneur, as an ambitious guy, I do want to see how I can use my subconscious mind to advance our businesses. I do want to do that. And I'm now aware of the fact that that's going to be in some ways in conflict with the brain of an underwriter who's managing risk day in and day out. So for now, haven't figured it all out, but I am aware of that fact. And I'm very curious to see like where this study is going to take me.
well, so here's another thing to think about. Like you learn from experiences and you only know what you know based on seeing that. So I think on our end, and we've been very transparent that we have about $50 million deployed, right? And every day we write a new loan, every day we get paid off on an existing loan, right? So that's where we've been for a long period of time. And we've been well capitalized for a long period of time. And we would do every good deal that reaches our desk. Sometimes it happens where we're just overfloated with deals and we're like, shit, like maybe we should be a little bit more conservative, right? And then some days we're like, oh, well, deal flow is a little bit low. Should we try to do a deal like this? Get creative. And it's like, I don't know. Wait, that doesn't work. Point being is that we know what loans, just based on experience, right? Like done 4,000 of them. We know what loans perform and which ones don't perform. So with our underwriter hat, it's hard to say yes to a deal that is shaky and rocky because we know how it's going to play out. Like we've seen this story. We've wrote the script to this story. Like we know what's going to happen. So that I feel like if you're naive and you're newer and you haven't seen that yet, you just don't know. So you might take that risk. You might take that chance. You might not even know it's a risk. But I feel like one of the challenges on some of this stuff is like we've seen how this happens. It's like, hey, we lent $100,000 to this borrower who, you know, inherited this property and it's free and clear, and, you know, we're at a 25 LTV deal, and they want to take the cash out, renovate it, and sell it, and they don't have great, you know, they don't have great financials. They've got lower credit, but it's a 20, 25 LTV deal. And somebody might say, well, that's a home run deal. Like, why wouldn't you just take the property? And it's like, yeah, you're right. But there's a lot of other things that go down to this, right? You're dealing with an unsophisticated borrower that doesn't know how to make the right decision, who starts defaulting on your loan. And instead of, like, you know, trying to just sell the property, they don't have other means to get money for the capital. So, let's go refinance it. Like, you can't refinance. You have late payments on it. Go sell it. Well, I don't want to sell it. I'm leaving a lot of money on the table. It's like, you don't really have that much money into this thing.
No,
because
they're foreclosing. I'm going to declare bankruptcy because that's going to help my exit a whole ton, right?
And like, we know that it will happen because it happens all the time. So I feel like, you know, it's a good thing and it's a bad thing, right? Like, you know, I do think it's a good thing that we're disciplined to stay away from those deals, but it's also a bad thing of, like, hey, you know, do you want to take this on in your portfolio? It could help grow it. So it's not just, I think, the underwriting mindset subconsciously of, like, that's how we think. A lot of this is like, well, wait, no, like, this isn't my opinion that this deal is going to default. It's a fact. Like, it's happened, you know, 10 out of 10 times in the past. So I think that's also one of the challenging things with some of that. And that being said, like, you can make your, you know, as a lender here listening or watching, you can structure your business any way you want. I remember back in the day that, you know, there was a lender out there that did pretty much everything loan to own. That was his philosophy. And he happened to be in a state that the foreclosure laws were good, were in his favor. And his whole freaking portfolio was in default. But he made a lot of money on those deals. You know, he juiced every dollar he could out of every single one of them. And I don't think he didn't necessarily do it in a predatory way either, right? Like, he structured the loan based on what made sense, and he followed through with the note based on, you know, the default terms. But that's what he wanted to do. Like, neither one of us want to be in court all day or have to go down that route. Like, in a perfect world, we close, you know, if we close whatever 200 deals, they all perform perfectly at the 12.99% interest rate. Everything was perfect, and our life would be easy. But at the same time, that's significantly less profitable than something that's more, you know, has a lot more defaults.
Yeah, but also at the same time, I mean, if it does perform that well, you're going to be much more inclined to scale, you know. And I think about that related to other lenders' portfolios. Like, you know, we don't get to see those. Like, it would be nice to see portfolio data on all of your competitors and their P&Ls and everything else. But hey, we're in a private industry that doesn't disclose those kinds of numbers. But yeah, no, it's just a really interesting topic because I think about how that risk management mindset might be holding back some of my other thinking, like in other areas where I can afford to take some risk in my thinking, and there's like all upside, no downside, and stuff like that, right? Like we do it all the time. Like, there's limiting beliefs that that people have. There's so many of them, and even learning that term and the fact that business people bring it up so often helps to know, like, what is a limiting belief? Where did I create this? But I'm thinking in this sort of and I see it with my family too, kids. Yeah, interesting how the limiting beliefs pop up in different aspects of life and can, you know, hold you back. Like, that's what they're for. Limiting beliefs are meant to limit you, and that's not what we want in business. But at the same time, we do want to be careful. We do want to be safe. We do want to be a good steward of our investors' capital. So it's just it's a complicated subject, you know, but it's important and fun to work on. And that's why we wanted to have this conversation on the podcast, because it was going to happen here in the office today anyway. I'm glad we turned on the cameras and did it here. Hopefully people get some value out of this conversation and can apply it to their own business in life. That's what we're here for. We have been getting a lot of really cool feedback, guys. We appreciate everyone listening and watching. People do reach out to us both inside the mastermind and just hit us up on email and stuff like that, and tell us how much they appreciate the content that we're putting out in this niche little industry of ours that is really short on content. So again, thank you guys. We're glad that you get value from this. Anything else to add here as we wrap up, or I think we are good to go? All right, everyone.
I think that makes sense. We got some really good episodes coming out here in the next few weeks. We also have some very good guests, industry guests that we have lined up as well. Depending on when you're listening to this episode, we are in early 2025. So looking forward to a great upcoming year inside the Private Lenders Podcast.
All right, guys, that is the pod for today. Stay tuned for the next episode. Have a good one.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.